Guys, welcome and hello and welcome. Thank you for joining me on another very exciting edition of Poco Moss, the show where we give you just a little bit more. Today is July 9, 2024. It's a Tuesday. We got about 2 hours left in the trading day, about 11 a.m. out here in beautiful sunny Los Angeles. Hope it's a wonderful day wherever you are. Guys, the Sofi stock, pushed down a little at the beginning of the day, had that huge push down yesterday. They reaccumulated all the shares all day yesterday. Today, the push down was just a lot stronger and the reaccumulation is there. Let me share my screen with you guys. So you see what's going on the day. Volume is back to being pretty strong, really picked up yesterday. Something definitely changed yesterday in terms of how institutions were approaching this thing coming into the ER. The FUD narrative is so thick, guys. This is one of the worst. This is one of the, this guy who wrote this bearish article for Seeking Alpha, this particular one, Hawk Invest. It sounds like it was written by a special needs child. They were just forced to write this article. Really actually sounds like it was written by one of the bear commenters on my YouTube channel, the exact same art. But if you actually distill it down, there are no arguments. They don't address any data. They don't address the business model. Basically, the entire thing boils down to, hey, the share price has been down. It's been stagnant. Therefore, there's a lot of opportunity at cost holding. It's basically said because the share price has performed poorly in the past, it's going to necessarily perform poorly in the future. It just makes absolutely no sense. But we'll take a look at this thing. But, I'm looking at what's actually happening. Another argument the bears are making is, hey, institutions are dumping based on that Qatari fund getting out of the stock. First off, Middle Eastern sovereign wealth funds are maybe not the most sophisticated investors in existence. I mean, look at what the Saudis do. They spend billions of dollars on Gulf and, Lucid and a lot of these investments. So if you look at what they're invested in, I looked at what that fund's holdings are. I mean, I don't agree with all of it. I don't disagree with all of it, but I just don't think we should put as much stock in that as if, say, BlackRock sold out of their position or, some of the other, large companies that hold SoFi sold out of their position. But I'm trying to go fact versus fiction here. If you actually look at the institutional ownership, it's actually at an all-time high. So, the all-time high was 440 some thousand shares back here in 2022. This thing just broke through 450,000 shares, 460,000 shares. 460 million shares. So 44%. This is an all-time high for institutional ownership. Now, it's very low compared to Robinhood or Affirm, and that's true. But for SoFi, it's an all-time high. So to say that institutions are dumping out of SoFi is just factually incorrect, unless you have some other data. Put-call ratio, again, nothing really going on there. But yeah, I'd be very concerned if Vanguard sold all their shares, or some of these other companies, but that's not what we're seeing at all. We're seeing all the filings, more and more pension funds, hedge funds, institutional investors actually buying into the stock. And yes, it's not a tidal wave. It's gone up. You can see it was at kind of a low point here a year ago, and then just steadily, slowly risen. And then the last 3 months has basically taken off much, much faster, which is a very good sign that sort of these doldrums might be over. In terms of the chart, guys, what are we looking at? This wedge is getting tighter and tighter. This often happens with SoFi coming into earnings. Does that mean the stock is going to break to the upside? Does it necessarily mean it couldn't keep trading sideways? Not necessarily. But you guys know as well as I do, there's usually considerable volatility with the SoFi stock around earnings. If it has really good ER, it often, jumps 20 to 22%. I would recommend selling that pop because it always sells off that and then some over the coming days. So that's fairly predictable. Sometimes it just sells off inexplicably on a good ER. So you don't necessarily know what's going to happen with this stock. It doesn't respond sort of predictably and logically to catalyst data, earnings reports as some other stocks does. And that's because the mechanics have a hold of it. It's a trading stock. And, this Hawkeye guy, Hawk Knives, Hawk whatever, his article basically makes the point that shorts are shorting the stock and shorts have made money therefore it's a bad investment. Again, doesn't really make a lot of sense. You could go the other way and say that if the fundamentals are really good and they continue to perform and surprise to the upside, you could see, that short interest work in the favor of bulls, and you have a strong pop. I don't want to say it's going to be a short squeeze. It's not going to be that dramatic, huge pop you see with, shorted companies like Carvana or Affirm or something like that, because they just, I think the short interest on Affirm was like over 40%. So far, it's still, about 18%. So that's enough to apply upward pressure if they start to cover, but it's not enough to get anything extremely dramatic going on. Let's see. We've got J Money, not a lurker. Yeah, no, I'm definitely driving the bus, Credit Savage. You have that right. Yeah, this is all me. No, I didn't buy any shares today, guys. I was buying the other day. I bought down, I think 631 or something a couple days ago. Maybe it was yesterday. I don't know. I can't even remember. I put these orders in. Yeah, I bought, I think, somewhere right here, 630-ish. But anyway, that's neither here nor there. I'm not trying to give advice. People are like, oh, you're just pumping the stock. Guys, this channel doesn't make any difference. I just kind of enjoy talking about the stock because it's like an underdog stock for me. It's a stock that's, should have died due to the student loan thing with COVID and everything else. This company just should have gone out of business. But Noto talks about, they implemented a new strategy 6 years ago, 2018. I think that's when they hired him. And if you start to look at the fact versus the fiction, you look at Q1 2020 and then you look at Q1 2024, the data is undeniable, the trends are undeniable, the growth is not only solid, it's extremely consistent. They don't have these down years, these huge down quarters where their business falls apart due to macro, due to challenges. These guys are hedging risk. Management with SoFi is better. Their business model's better. And if you guys saw the interview with Noto and then you saw the interview with Derek White, 51 minutes, Tevis commented on that. And then you contrast that with the hour-and-a-half interview with the five-headed bologna sandwich, Giuliano Bologna with Compass Point I was forced to sit through. He was being interviewed by some dude who's, this guy was, he had all the energy of a sloth and some kind of strange like tennis ball hairline thing going on with that shape of a tennis ball. I don't know what was going on with this interview, but I had to listen to the bologna sandwich drone on and on and on because, guys, I like to be informed. I like to hear intelligent bears make their case. And it was very clear Giuliano Bologna, after listening to him, it would have been more exciting to watch paint dry. The guy's, the guy in his unibrow and his five head are just about as boring and not stupid. He's very, very smart, but he's talking about, I like to go inside the numbers. I like to go inside the data. I don't like to be disconnected from the data. And then he goes into these mental gymnastics to try to make SoFi look bad and the fair value accounting stuff. Even the interviewer basically said, but at the end of the day, this accounting system is legitimate. And over the long haul, it's going to give you an accurate picture of, SoFi's performance. And he's like, yeah, it will. And so by 20, these personal loans are not mortgages. They don't last 10 or 30 years. They last a few years, maybe 4 or 5 years. A lot of them are probably 2 years. They can be paid off early. So by 2026, if the whole loan book's fallen apart, if Giuliano Bologna and the Chia Pet, if they're right, we'll all know. And this farce will be over and it'll all be dead. It'll all be gone. Is that Noto's plan? To humiliate himself with some type of fraud? It's just absolute bullshit. The FUD is bullshit. The numbers are the numbers. God, what are we talking about? This is the technology platform that doesn't exist. It's not valued. Okay, total revenue from, March 2022 in the last 2 years gone from 60 million to 95 million. That's a 53% increase in 2 years. It's not, world life-changing, new bank growth, but it's very, very solid. And then financial services, total revenues, 23 million to 150 million. And these are the two segments that Noto's focused on, that SoFi is focused on growing, de-risking the loan book, becoming more selective, becoming much more selective on credit cards. But that net interest margin, can't be denied. SoFi's doing so many things right. You don't have to be one thing or the other. You can be both. You can be a bank and a tech company. You can be a rapidly growing bank with no real estate, a low head count, a very favorable cost structure that would make money anyway. And you can have a technology company that you own wholly, that's saving you money in-house, that's going out and selling, to external customers, B2B. I mean, people are laughing. Oh, you're getting excited about adding a wire transfer API. Yeah, it's important, dummy. Maybe you don't know because you're broke and you never buy property and you never have to transfer large amounts of money from one place to the other. And maybe it's not limiting for you to only be able to send $50,000 at a time. But people like me, I have to send millions of dollars around. I do big real estate projects. So it's very, very important. You cannot be a one-stop shop without putting these pieces in place. It's extremely important. And other fintechs, other non-bank entities, they have no access to wire transfers. You guys just don't know anything. You're dumpskis. Oh, a bunch of broke-ass piker wannabe douchebags. Welcome and hello, guys. Hello and welcome. Thanks for joining me. It's Un Poco Moss. Want to thank the live studio audience. Want to thank J Money Not a Lurker. Would like to thank Alberto Berdiavales. Of course, my whole staff, including Stock Karen. What's the other guy's name? Hurricane Lopez. I can't even remember who's in the office here. So the bear case, to me, it's just idiotic. It doesn't survive the laugh test, the smell test. It doesn't survive basic scrutiny. And that's just my opinion, but just going down sort of the list, this is the one thing I said, even this moron, he's like, this guy's dumber than most. I mean, his conclusion is like, you just put technology in the name, but there's no adding technologies to a company's name does not make it a technology company. Like if Citibank renamed themselves from Citibank to Citi Technology, I wouldn't pay more. Like that's the kind of argument you're getting, out of this, imbecile. But, for some reason, whatever reason, Seeking Alpha is willing to put this on. I think somebody has to pay them to put this on because again, it's just so dumb. If you read this article, it literally sounds like it was written by a very, very, slow-witted 5-year-old. And it's just rehashing these arguments that you see these bots and these people repeating. They do down in my comments just over and over. The argument against SoFi, the bear case, if you want me to like hold your hand and do it for you, is that they have some kind of scandal, some type of an event where public sentiment turns against the company. SoFi is not, Wells Fargo, where they can get into some kind of deep, deep scandal and weather the storm through all their other businesses. If SoFi were to have some type of scandalous event and public sentiment would turn against them, that would be an extinction black swan event. That would kill the company because their business activities are profitable. Their growth is there. The deposit growth is such that it's like becoming a self-fulfilling thing. It's going to grow. It's like a snowball rolling downhill into an avalanche. I mean, the deposit growth is there. It's direct deposit. It's sticky. Those customers aren't going anywhere. SoFi Bank will continue to grow, which will continue to give them discounted lending capacity, which will continue to feed high net interest margins. The notion that these transient, macro, cyclical sort of things that affect the entire economy, that affect everyone in the lending industry, that affect every bank, every lender, that's just going to kill SoFi for some reason, like a laser beam focused in. It's just going to destroy SoFi and not all these other companies, even though SoFi has higher quality loans than all these other companies. The FUD makes no sense. They don't talk about the swap agreement SoFi entered into in Q4 2023 to hedge against the risk on the personal loans. They never talk about that. They don't talk about SoFi selling off some of their problematic loans. They don't talk about that. They go both ways on the balance sheet. They're still talking about SoFi being balance sheet constrained. Noto saying the exact opposite today on CNBC. Watch the interview, guys. I'm not going to replay it for you because this is painful to me. He just looks uncomfortable. They always have him outside in some pasture, some wealthy person event. Like SoFi is not a bank for billionaires. Stop with the no socks, like Skechers wake up shoes and your feet up on your little stool, a bunch of foundation on. Just stop it. Just stop with these, I'm going to be interviewed by some attractive intellectual woman, probably in her late 40s, early 50s. I don't know. And I'm just going to give these canned responses. Just stop it. Just stop it. Get Derek White. I mean, I love Anthony Noah. I think he's brilliant. I think he's a brilliant numbers guy. I think he's a brilliant risk guy. I think he's the guy you want at the helm. Is he a guy you want on TV all the time in that goddamn windbreaker out in some pasture in Davos, Switzerland, or Pebble Beach, or wherever the hell he is? No. When he was on with Kathy Wood and they were just talking and it was just off the cuff, Noto, absolutely brilliant. Sometimes when I've seen him on with Kramer and they're just having a conversation, you could tell it's not all canned responses. Brilliant. These deals, these hits where he goes on for like 5 minutes with these, CNBC women out in some field somewhere talking about, let's just, I want to talk about your business, Anthony, but before that, can we just talk about the macro? Can we just talk about your windbreaker? Can we talk about what type of Grecian formula you're using on your temples? No. Talk about what a great company this is. It's like, well, your stock price is really down the shitter. Doesn't that make you upset? Doesn't that give you a sad? He's like, yeah, it gives me a sad, but, moving on. We're just, adjusted EBITDA. So anyway, guys, I don't really know what I'm talking about. My voice is popping like a teenager going through puberty. Oh, I hope my testicles descend soon and this voice changes to a bit of a baritone. Anyway, guys, welcome and hello. Joy Loon is here. Thank goodness. I saw one name, looked up at my comments. It's Joy Luna. Happy to see you, Joy. Good to see you. Haven't seen you in a little bit. Hope everything's going well. Hopefully you're selling some of that luxury real estate, making some sales. I know it's a tough market out there with interest rates and realtors are being hit from all sides, guys. Not just lawsuits, all these other things, but it's one of those professions where you have to really hustle. Like if you're a real estate broker agent, you could make nothing and you could just sit there and flounder, or you make your own break and you go out there and create your own business. It's really kind of a pure form of sales. But it's under fire. Any place like the average person is making a good living is going to be under fire from sort of, technology, automation, whatever it might be. And in this case, like lawsuits, class action lawyers. Class action lawyers love to get a hold of industries with deep pockets like those realtors that are always on them juicy vacations. What's up, Mustang Rider? How's M. Russo doing? Don't like and sub whatever you're doing. What's up, Assface? What's up, SJ Tavares? Thanks for waiting. I appreciate you. Always one of my best supporters, SJ Tavares. Big up to you, SJ. Let's see. Dude, ass face here. Let's freaking go. Brian, oh wow, I'm here at the start. Never happens. What's up, Brian? Good to see you. What's up, Flint Creek Soap Company? Nice to see you guys. Head on over to Flint Creek Soap Company and buy something. Support a small business. Nicholas Youngworth, welcome and hello. Hello and welcome, Nicholas. Good to see you. Dice or whatever the your name is. I can't always remember. The gang's all here. Good to see you. Dice, pence, none the richer. I can't remember stuff. I'm not very smart. Dice. I'm sorry. I wish I was smarter. I wish I was intelligent. Life would be so much better for me. I would have a good engineering job, maybe be a physician. Princess J, would have it much, much easier because I wouldn't always be forgetting stuff and trying to make jokes and, laughing at farts and just being a general big fat child idiot that I am. But anyway, guys, that's neither here nor there. This show's not about me. It's not about me. It's about SoFi. SoFi Technologies Incorporated, ticker symbol SOFI. And if you believe I've only had one cup of coffee today, I have a beautiful bridge to tell you. It's up near San Francisco. It's orange. Orange, you glad I didn't say banana? One of my favorite jokes, besides the interrupting cow. That's my favorite joke of all time. Interrupting cow who? That's a great one for friends and family. And SoFi pumping, beautiful. Yes. I don't know, Brian. I mean, what do you think the thing's worth? I just don't consider myself a pumper. I have a ton of shares, I guess, but I'm not intending to sell them quickly or try to do anything. I don't know. I guess I see pumpers out there pumping like meme coins and like I talk about penny stocks, but I do say I think there's a great likelihood they're going to go to zero. So I try to be honest. Yeah, I do buy some stupid stuff, but I try to be honest that it's stupid. But SoFi, I don't think is stupid at all. SoFi, I think is just grossly undervalued. And I'll tell you why. I'll tell you why I go through this stupid article, but okay, no growth. I'm going to show you in a second. Deposits, members, revenues, profits. It's all nonsense. Fair value. So I'm trying to say Brett Favre. Fair value accounting is a scam. This is absolutely false. This is FUD. If you look at the analysts like Dan Dolev and the guy DeVries from Deutsche Bank, They went in for full days with SoFi management, and they took a hard look at this issue, and they both commented on it directly that, you know, they don't see this as a major problem because management is aware of it and is on top of it. And this notion that, oh, they're going to have to switch to another accounting system which is going to cut their book value, that's not how this works, guys. Accounting does not work in a vacuum. You can't just switch it all one day, and in fact, you would not be able to. It's never going to happen. There's absolutely nothing wrong with SoFi's accounting system, but management has to be aware that they're, you know, writing up the value of these loans on day one, and that you know, opens them up to significant downside risk should the loan book start to fall apart and you start to see high defaults. And they know this, but Noto's again saying defaults are right within, you know, our projections, right within what we're prepared to deal with, and right in with the levels we hedged for. You know, defaults didn't increase from Q4 to Q1, and I'm not seeing anything about the economy that makes me think these, you know, these guys with good jobs, you know, guys and ladies, excuse me, who borrow from SoFi, I don't think they're falling apart. In fact, the labor market looks pretty strong on the high side. Yeah, if you're going in for an entry-level job, you know, particularly in California, these much higher minimum wages that put some pressure on those types of jobs, but there's still a lot of jobs in there. Let's see. See here. Not sure who that is. In any case, guys, I got to wrap this turd up. I got a lot of work to do today, but I just wanted to kind of come on and do a little bit of fact for fiction. These loan defaults, these massive defaults, it just hasn't started. Steady in a range. Balance sheet constrained. Noto is talking about this today. The opposite is actually true. They have a ton of capacity on their books to make loans, and not only that, but they're pulling in, you know, $3 billion in new deposits every single quarter. And not only that, but the senior secured note deal opened up again more and more loan making capacity. So when we see student loan, home loan, we see a need for more personal loans, and you see these rate cuts come, SoFi is going to be in a position to capitalize huge coming into H2 2024 and full year 2025. And guys, Mr. Market wants to hear guidance. Mr. Market cares about guidance. That's what they ostensibly hit SoFi with after Q1. You know, they gave weak guidance for Q2. So even if Q2 is like Q1 and a little bit weak, and that's another point I'll make, it wasn't weak, but even if they want to say it's weak, if they give huge guidance for the full year and huge guidance for Q3, the stock should respond accordingly. Now, does that mean it will? Absolutely not. Do you guys want to check of the live short interest? You massive turds. Guys, the borrowed change, 1.5 million on the day. Yesterday, it looked like they might return a few shares, and then after hours, borrowed another 6 million. Cost to borrow, still very, very low. Still one broker out there paying people to short the stock. Give you a few guesses who that is. You could tell that probably by looking. But in any case, guys, this shares on loan doesn't really make any sense because every day they say they borrow change more and more, and then this number starts to go down. But anyway, the short interest is somewhere 18 to 19%, probably higher, probably more like 20%. They're really pushing it up coming into the ER. In terms, again, of the chart on the daily, lots of accumulation. You saw the same exact thing yesterday. You see this big sell-off goes from 650 to what was it yesterday? 650 down to 640, and then the rest of the day, most of the candles are green. Even out here, there's some accumulation, and then again, huge sell-off in the morning. Popped it all the way from what was this? 636, all the way to, I don't know what the low of the day was, guys, all the way down to like what, 615 or something, and then just accumulation the rest of the day. I mean, here's, you know, there's some big orders coming in, so these are million share candles, you know, 2 million shares. And what you normally see with this algo when you see huge candles come in is it'll open and close basically at the same level, and that's what you see here. But the algo is working very, very hard, but if they're accumulating millions and millions of shares and institutions want to buy the shares, the stock price is ultimately going to go up, or they just have to short it more and more heavily. This is not, they want to make this super, super complicated, but a short is still a bet against the stock fundamentally. That doesn't mean traders can't just push it down As much as we want stocks to behave logically and for the share price to always be connected to the fundamental performance, that's just not how life works, guys. And we have to come to peace with that. And we have to be able to take, periods of a stock moving sideways and down when we think it should be moving up. I mean, that's just the reality. If you let me just clear this out and just take a look at the reality of what's happened. If you kind of cut through all the BS, like the stock came off SPAC Mania, fell down to $6.12. Okay? 2.5 years ago. No, 2 years ago. A little over 2 years ago. And that's still where we are right now. The stock's just moved sideways and consolidated for over 2 years. That's it. It hasn't fallen apart. They sold off, institutions were selling off some of their shares late 2022, early 2023. Recently, they've been reaccumulating slowly at first, more quickly of late. That's what's been happening. I mean, yes, it has reached yearly lows because it's been trading since this run from, May 2022, ran up for, 3 weeks, ran up to 860. Then it made this run up. And then it's basically been trading sideways. I mean, it's at the exact same level it was here. A year and 3 months ago. It's the exact same level it was here. September 2022. So the market makers have held the stock at this level, and it's basically followed a lot of other fintechs, a lot of other, companies in this same industry. But the difference is, guys, SoFi has continued to outperform those companies on a fundamental basis. That's the reality. And that's why I see it as an opportunity. That's why I see it as a buying opportunity. I mean, I would ask the bears to look at the factual numbers. Okay, this is in 4 years. Member growth from 1 million to over 8 million, 8x. 1.4 million products to 12 million products. Now, the Galileo accounts that they're saying are dead, this was 4 years ago. It was what is this in millions? 30 million accounts. Now 150 million in 4 years. So even though you did hit a little bit of a dip here as they went into the transition period, trying to get rid of some of the unprofitable, stale, clients with no members and trying to get into some better, bigger clients, still factually, in 4 years, the members have gone from 30 million to 151 million. That's a fact. It's just, financial services products. 3 years ago, 2 million, now 10 million. That's going to have great margins. I mean, the revenue growth there has been huge. And the growth is solid. What can the bears say? Well, high interest rates are going to kill the company. Well, it didn't happen. The cuts are coming. None of the stuff you said was going to happen happened. Look at your hero, David Chiavarini. He said they were going to have to do a money raise end of last year. Why? Because deposits were going to fall off? I mean, what was the logic? Did anybody ask him about the logic? Did his bosses say, why would they do this? When they have cash on hand, they have warehouse facility. Why would they do a bad money raise? They came at the senior secured note deals from a position of strength. It helped the company. It helped the balance sheet. It helped loan capacity. It was good for shareholders. I don't get these guys. Look at the numbers. I mean, look at the numbers. Q1 is always bad. Q4 is always very, very strong. Look at Q1 on Q1. Look at this growth. And then more importantly, look at the guidance. Okay, for Q1, the low was 550, the high was 560. They came in at 581. Now for Q2, the high is 565. So if they can beat again by 20 million, it should be 585. Tevis made a video saying why he thought earnings were going to be, could be a huge miss. I've heard other people, talking about, in fact, one of the analysts, I think it was from Seaport, he just lowered his estimate from 2 cents to 0 cents. And he gave sort of some, accounting machinations that frankly, my caveman brain can't understand fully. I tried looking things up, but I'm not strongman personal finance. I'm not a CPA. So I'm not going to claim to understand every nuance of financial statements. So I don't want to speak on things I don't really understand. But when I really started to analyze it and I started to talk to some of my idiot buddies who also own SoFi, it just didn't. There was no there. There's no substance to these bearish arguments. Okay, fair value accounting, but they've been using fair value accounting. These loans that are supposed to be defaulting in mass are not defaulting in mass, and they hedged against that risk. It's not a world ender. Does Noto look panicked? The guy looks calm, collected, a little bit too calm, a little bit too methodical. Anyway, so if they have the same kind of beat they almost always have, which is, they beat the high end by 4%, and then on adjusted EBITDA, they beat the high end by 3%. GAAP net income, they beat the high end by 20 million. I mean, I don't see why EPS is going to move back to zero. Noto in an interview today said we remain profitable going forward. Q2's over. The quarter's over. He already knows the number. Oh, this FUD. They get the FUD. They're trying to sell off the stock. It's lies. It's cheap lies. That's what gets me. That's what gets me worked up. It's not that the share price goes down or sideways. I don't give a flying fuck. I told you guys over and over, SoFi it's like my fifth largest stock, and I am a real estate guy, guys. I'm not a stockbroker, as if you couldn't tell. My biggest position is Microsoft. I've had that stock since I was in college. I will be fine if SoFi goes down. I just think it's undervalued. I think what Mr. Market has done to this stock has just been, an unjust travesty. And I think management's done an incredible job. And that's I started making these videos, I think, when SoFi dropped down into the fours. And I was like, this doesn't make sense. And it makes even less sense now for the stock to go back to the fours. It just doesn't make sense to me. I think the stock is going to go way up. And I think management's going to hit that 80 cents and maybe hit even better. This article saying 44 cents. I mean, management keeps beating and raising and beating and raising every single quarter. And Tevis and others who think this might be the quarter where the wheels fall off, I just, respectfully disagree. I don't think it's going to happen. I think management's going to beat, and I think it's going to be a big full year guidance raise. That's what I think, guys. But I've been wrong before many, many times. I invite you to read this total piece of shit if you want, but you could see this guy, Hawk Invest. He's a financial blogger. His success rate's 43%. His average return is negative. And then you could see SoFi July 22nd, bearish position. And then go back. I mean, he rates ETFs. Every single call is bullish. Going back 6 ratings on Bristol Myers. Okay, that's a good company, but he still has a negative return on that. He's a dumbass. But every single call going back, and again, I agree, Tesla, I'm a Tesla bull, but every single call is bullish. Not one bearish call. Who looks at this many stocks and ETFs and has never made a bearish call in their life? Look at this. This is going back to 2016. I mean, come on, guys. And then this guy all of a sudden has a hard-on for SoFi and writes this 5-year-old preschool idiotic article with absolutely no sense to it. I don't know. The chart, it just, I invite you to read it, guys, but it's a total waste of time. But then again, so is my show. I don't have time to read your comments, and I don't really care. I'm just annoyed, and I'm a huge Karen, and that's the way it is. SoFi trading 28 million shares on the day, up 18 cents, 2.9% notice, 650, calls, never printed, never even closed. They got to get up to 670 at least to make any money there. So covered call, guys, not too worried at this point. If you had the ganas, you had the huevos to sell at 650, more power to you, because Max Payne is there, and it sure looks like institutions want to hold the stock down for another week. Are we breaking down in the fives? I'm not seeing it going into earnings. I think Noto was confident. Derek White, very confident. LaPointe, confident. I think tech could have a huge surprise the upside any quarter. If they bring on a huge company and that's immediate member growth, and you see members go up like 50 million or something, or whatever it is in one quarter, even, 40 million or 30 million, or they bring on sort of a mid-sized customer, 15 million members, 10 million members, whatever it is. I think it's going to certainly bolster the narrative that SoFi is in fact a technology company, as well as a rapidly growing, very well-managed bank. But anyway, guys, that's just my 2 cents as a fat middle-aged Karen. Hope you guys have an absolutely wonderful day. It's Un Poco Mas, the show where we try to give you just a little bit more.